What is reverse repo rate? How does it help the central bank to control inflation or deflation, or to control excess demand in the economy or deficient demand, or to control inflationary gap and deflationary gap? What is reverse repo rate? Reverse repo rate is exactly the opposite of repo rate. What exactly is reverse repo rate? It is the rate of interest paid by the central bank to commercial banks when they park or put their short-term funds, when they put it with the central bank. Or to simply put it, it is the rate of interest paid by the central bank to the commercial bank when the commercial banks keep their surplus funds with the central bank for short time period, for short time, or for a short period of time. That is reverse repo. Reverse repo rate is the rate of interest paid by the central bank to the commercial banks when the commercial banks keep their surplus funds with the central bank. Well, how does it impact the economy when the reverse rate, repo rate is increased or decreased? Well, let's see. Number one, when the central bank increases the reverse repo rate, that means instead of, let's say, 6%, they increase it to 9% reverse repo rate. That means the commercial banks will be attracted to keep their surplus funds with the central bank instead of giving loans to public, to households or firms. So when the reverse, if there is excess demand in the economy or inflation in the economy, what does the central bank do? The central bank increases the reverse repo rate. When it increases, the commercial bank keep all their surplus funds with the central bank. So their lending capacity will come down. They won't lend funds to firms for investment in the economy or households to buy household items. As a result, the demand for goods and services in the economy will come down, and the price of these commodities automatically will come down. Inflation will come down, excess demand will come down. The other way around, the opposite. If the central bank decreases the reverse repo rate, what happens? The central bank decreases the reverse repo rate, automatically the commercial banks don't want to put it with the central bank because the interest rate paid by the central bank to the commercial banks is very less.